If the US economy crashes, these 10 countries could fall with it, fast. From collapsing exports to financial meltdowns, some nations are so tied to America, a recession could wreck them overnight. Stay tuned, your country might be on this list. We've all heard whispers of a recession looming in the United States, but have you ever stopped to think about what that really means? We live in a world more interconnected than ever before. So, today, we're diving deep into the potential consequences of a US recession, exploring 10 countries teetering on the brink. Let's start with our neighbors to the south, Mexico. Mexico and the US share more than just a border, they share a deeply intertwined economic relationship. Think about it. Mexico sends a huge chunk of its exports north, with everything from avocados to auto parts flowing across the border. Now, imagine a US recession hitting. American consumers tighten their belts, demand for Mexican goods plummets, and suddenly, Mexico's economy is in freefall. Millions of Mexican families rely on remittances, money sent home by relatives working in the US. A recession would mean fewer jobs, lower wages, and a drastic drop in those vital remittances, pushing families into poverty. The bottom line is this: Mexico's economic fate is deeply intertwined with that of the United States. Next up we head north to Canada, a country often seen as a beacon of stability. Canada and the US are like two peas in an economic pod. They share the world's largest bilateral trading relationship, with goods and services flowing freely across the border. But this integration cuts both ways. When the US economy sneezes, Canada catches a cold. A US recession would mean a sharp decline in demand for Canadian exports, hitting industries across the board. The Canadian financial sector is heavily invested in US markets, so while Canada might seem like a safe haven, its economic fate is inextricably linked to the United States. Now, let's travel across the Pacific to China, the world's second-largest economy. China has long relied on exports to fuel its economic engine, and the US has been its biggest customer. But a US recession would mean a sharp decline in consumer spending, dealing a devastating blow to Chinese exports. Factories would be forced to close, millions of workers would lose their jobs, and social unrest could erupt. China holds trillions of dollars in US debt. A US recession could lead to a devaluation of the dollar, eroding the value of China's holdings, and potentially triggering a financial crisis. Furthermore, American companies have invested heavily in China, building factories, creating jobs, and driving economic growth. The bottom line is this: China's economic miracle is built on shaky ground. From China, we move to Japan, another Asian economic powerhouse facing significant risks in the event of a US recession. Japan's economy has been struggling for decades, grappling with deflation, an aging population, and a mountain of debt. Japan relies heavily on exports, particularly to the United States, for economic growth. A decline in US consumer spending would hit Japanese industries like automobiles, electronics, and machinery particularly hard. Japanese banks and insurance companies hold significant amounts of US assets, including government bonds and corporate debt. A US recession could lead to a decline in the value of these assets, potentially triggering a financial crisis in Japan. The Japanese yen, often seen as a safe haven currency, would likely strengthen against the US dollar during a recession, making Japanese exports more expensive and further hurting the economy. In short, a US recession would be a significant blow to Japan's already fragile economy. Crossing continents once more, we arrive in Europe, where Germany, the continent's economic powerhouse, stands precariously close to the edge. Germany's economy, renowned for its manufacturing prowess and export-oriented industries, is deeply intertwined with the global trade network. A US recession would send shockwaves through this network, causing a domino effect that would hit Germany hard. As demand for goods and services in the US plummets, so too would demand for German exports, from luxury automobiles and high-tech machinery to chemicals and pharmaceuticals. Germany's manufacturing sector, the backbone of its economy, would be particularly vulnerable. Furthermore, Germany's financial institutions are heavily exposed to US markets. In conclusion, while Germany might be the economic engine of Europe, it's not immune to the global economic headwinds generated by a US recession. Our journey now takes us to South Korea, a technological powerhouse facing its own set of challenges in the face of a US recession. South Korea's economy is heavily reliant on exports, particularly of electronics, semiconductors, and automobiles, with the US being one of its largest trading partners. A US recession would translate into a significant drop in demand for South Korean goods, impacting major companies like Samsung, LG, and Hyundai. These companies would be forced to scale back production, leading to job losses and a slowdown in economic growth. South Korea's financial markets are also deeply intertwined with the U.S. A U.S. recession could trigger a sell-off in Korean stocks and a depreciation of the Korean won, making it more expensive for Korean companies to import essential goods and repay foreign debts. In conclusion, South Korea's economic success is closely tied to the global economy, and a U.S. recession would have a significant impact on its export-oriented industries, financial markets, and overall economic stability. Across the globe, the United Kingdom, still grappling with the aftermath of Brexit, faces a double whammy with the looming threat of a U.S. recession. The UK economy, already weakened by the uncertainty surrounding its departure from the European Union, is particularly vulnerable to external shocks. The U.S. is the UK's largest single trading partner, and a recession in the U.S. would have a significant impact on British exports, from financial services and pharmaceuticals to automobiles and machinery. This would lead to job losses, a decline in economic growth, and a potential recession in the UK. London, the UK's financial hub, is particularly exposed. The City of London is a global financial center, deeply intertwined with Wall Street. In conclusion, the UK, already facing economic challenges due to Brexit, is particularly vulnerable to a US recession. Our journey takes us next to India, a rising economic giant with 1 billion dreams on the line. India, with its burgeoning middle class and rapidly growing economy, has been hailed as a potential engine of global growth. The US remains one of India's largest trading partners, and a slowdown in the US economy would impact Indian exports, from textiles and pharmaceuticals to software and IT services. This would lead to job losses, particularly in export-oriented industries, and a slowdown in economic growth. India's IT services sector, a major driver of its economic growth, is particularly vulnerable. Indian IT companies rely heavily on outsourcing contracts from US corporations, and a US recession would likely lead to a decline in these contracts, impacting revenues and employment. Furthermore, a US recession could lead to a decline in foreign investment in India. In conclusion, while India is better positioned than some other countries to weather a US recession, it's not immune to the fallout. Our penultimate stop takes us to Brazil, a country of vibrant culture and vast natural resources yet grappling with economic vulnerabilities. Brazil, once hailed as a rising economic star, has been struggling with corruption scandals and political instability. A U.S. slowdown would impact Brazilian exports from soybeans and iron ore to automobiles and aircraft. This would weaken Brazil's economy, leading to job losses and a potential currency crisis. Brazil's reliance on commodity exports makes it vulnerable to global demand fluctuations. A U.S. recession would likely hurt Brazil's export earnings. Furthermore, Brazil's high public debt makes it vulnerable to investor sentiment shifts. In conclusion, Brazil is particularly vulnerable to a U.S. recession. Our final destination takes us to Australia, a land of diverse landscapes and a robust economy, yet not immune to global economic currents. Australia has enjoyed over 2 decades of uninterrupted economic growth. The U.S. remains a significant trading partner for Australia, and a slowdown in the U.S. economy would impact Australian exports from iron ore and coal to education and tourism. This would lead to a decline in export earnings. Australia's financial system, while relatively sound, is not immune to global financial shocks. A U.S. recession could trigger a sell-off in Australian assets, leading to a decline in the Australian dollar. Australia's housing market is considered vulnerable to a downturn. In conclusion, while Australia is better positioned than some other countries to weather a U.S. recession, it's not immune to the fallout. So there you have it, a glimpse into the potential global impact of a U.S. recession. From Mexico to Australia, the fates of nations hang in the balance, their economies intertwined with the U.S. in a complex web of trade, investment, and financial flows. This isn't just about numbers on a spreadsheet, it's about real people, real families, real lives that could be upended by a downturn in the global economy. It's a stark reminder of our interconnectedness, of how events unfolding thousands of miles away can have a profound impact on our own backyards. What are your thoughts on the potential global impact of a U.S. recession? Which countries do you think are most vulnerable? Share your insights in the comments below, and don't forget to like, subscribe, and hit the notification bell to stay updated on future videos exploring the forces shaping our world.